Good morning, everybody. Hey, welcome to it is Monday, the 20th. Happy President's Day. Markets will be closed today, but we'll talk about something here when Dave joins us in just a few seconds. Before we do that, though, let's not forget that in the world we live, there are so many things that you and I just cannot control, but we can control, you can control how much risk you have in your portfolio. You need to know how much risk you have, and you need to know how much risk you should have in your portfolio. To do that, we developed our core retirement design to help you design that retirement you always dreamed of. Give us a call, 382-0037. And with that, we're going to have Dave join us here up next.
5.7 Light FM. It is Prince there. Morning, Dave here. We're at 8:41 now. It's 19 before 9. This is one of those days that's kind of weird because, well, stock market's closed, but the majority of us are still working in one form or another. Picked up the phone, called Phillip Statler a few minutes ago, and he said, "What do you mean not work on a holiday? It's tax season down here." So, yeah, he's on the phone from Statler Financial Services. Phillip, I trust you had a good weekend.
Well, I was out of town, but working still. Even though I was out of town, I managed to get some work done. That's what laptops are for, right?
Yep, and that's what tax season is for in your line of work. Pretty much you guys don't really get much of a break until after April 15th or this year 18th, right?
That's right. It's going to be busy between, the financial markets and the tax stuff. It's no slowdown this time of year for us.
I hear you completely. Well, we start out the morning with a closed marketplace. The bonds aren't trading today, and the market isn't going to trade today. The futures are still trading, so we will have some things to talk about. But still, we start out the table with the blue chips going up a little bit on Friday and everything else falling like a rock. The NASDAQ was down a full 0.5+% again on Friday. S&P was down by another 11. The Dow pulled out a bit of a gain, up about 130 points, but then we get over the weekend, and Bank of America has decided to take a great big old shotgun and aim it right at the market. Article this morning you and I were talking about before we came in. The S&P 500's game for the whole danged year, according to Bank of America, probably going to be gone by early March. It could go all the way down to 3,800, and they're saying basically because we didn't trade ourselves up to 4,200 a while ago, the world is going to end, according to Bank of America. Thanks, boys. We appreciate that.
Well, they really kind of went on, I don't know if you say they went out on a limb or not, but they actually put some dates in there as to what they think is going to happen, So they expect that the S&P 500, like you said, to head back down to 3,800. And they're actually saying by March 8th that they expect it to fall down to that number. So that's a pretty fast drop when you look at, we're at, almost 4,100 right now. So that won't be any fun over the next 2 weeks.
I was kind of thinking about the same thing, and they're actually predicting it before the Federal Reserve meeting toward the end of March, when they're going to change the interest rates, and the indications tend to point in the direction, anyway, of more than the baked-in 0.25% interest rate increase next month, just on the grounds of all the inflation and employment reports we've gotten. I mean, if we trade down to 3,800 by their prediction by the 8th of March, what Sam Hill's going to happen when the Fed surprises us on the unpleasant side with another big interest rate bump?
Well, and I think maybe they're thinking that's kind of maybe priced in a little bit with their numbers anyway, right? So because the guys at Bank of America, they're getting some agreement from the guys at Morgan Stanley. So we're not just seeing one firm looking in those directions. We're seeing multiple firms now getting on board with what Bank of America is kind of predicting.
Yeah, and the word hard landing was something that you and I have been saying we're still worried about for quite some time. All the markets started talking about soft landings. It sounds to me like some of the big guys are starting to come around to the fear that we've had now for quite a few months, with all of these big interest rate increases not even affecting our day-to-day lives yet. Now all of a sudden some of the big boys are saying, whoa, wait, right?
Yeah, maybe we are going to have a hard landing. You and I were both kind of optimistic, I would say, last week, thinking, okay, everybody's on the soft landing page, it looks like. So maybe they're going to make it happen. But, based on last week's market performance and based on what more and more people are starting to say from an economic standpoint, and Bank of America point is really well taken in terms of our growth is not slowing down.
Not
Our
one bit.
inflation's not slowing down. And those are the things that the Fed wants to see happen. And they're willing to do what it takes to make that happen, Dave. I'm fearful. And so because of that, we may see growth through the first half of this year, which means that we're going to see more pain when it comes to interest rate hikes. And that's going to, you and I've talked about this before, right? That the Fed will overdo it. And once they figure out they've overdone it, it's too late. And interest rates will be so high that it will stagnate business to go into deflation. And that will be painful. And that's going to cause this hard landing that Bank of America is predicting.
And that's the worry, yeah. And it is true. I mean, this puts us in the weird position of cheering for bad news. But, an economy in which there's 10 open jobs for every person out actively looking for a job, that's great for somebody in the employment market. But the bottom line is, on a macro basis, what it does is it just adds fuel to the fire of inflation. And we'll find out a little later on this week as to what's going on as far as the inflation measure that the Fed actually watches, because Jay Paulson has made it pretty well public that the number that they actually watch is the PCE inflation rate. That let's see, I do know what that stands for, but I'm drawing a mental blank right now. It boils down to a consumer market basket number instead of any of the funky macro numbers we use for the CPI. And that's the one that Jay Paulson watches. And it's still running a good double what the Fed wants to see. They're expecting it to be at like 4.4% off of the mark that we get this week. If it's a pleasant surprise, it may be good news as far as the March meeting is concerned, but I'm frankly not optimistic given what the CPI did last week.
Yeah, we're not going to get the PCE until Friday morning.
Yep.
So we've got a whole week of other numbers that are coming in, though, David, because we've got some stuff coming. Tomorrow, Tuesday, we've got the CPI coming. And that one will be that'll be telling, right, as to what we think is happening in inflation. And my numbers say that we're going to see some move there. So
the PPI number from last week, the wholesale inflation number, did not augur well.
No, it did not. And so let me get on the right page here. I was on the wrong page. Sorry about that. Right. Yeah. So we do have existing home sales come out tomorrow, though.
Yeah, we also had the Fed minutes coming out on Wednesday afternoon, which once again, it used to be just something the green eye shades looked at and really didn't move much. But since we're all trying to read tea leaves as far as what they're likely to do and what their mood is, a comment from a Fed governor in the minutes saying, well, if it goes up, we're going to have to go back up to 3/4 of a point or something like that. That could cause a seismograph on the markets on Wednesday afternoon as well.
Yeah, it really could. And then we've got not only do we have jobs on Thursday day, we have the first revision of the GDP comes out on Thursday as well.
It's going to be a very busy week after a quiet Monday, isn't it?
It is. We do got some stuff coming out. And so, especially Thursday, Friday, those are going to be some important numbers coming through that are definitely going to influence what the Fed decides to do.
Absolutely, and not to mention the fact that we're still in earnings season. We got a few big ones coming out this week. Later on this week, we're going to hear from Walmart and Home Depot, among other ones, and that's going to keep us plenty busy as far as moving the market with some Dow components.
It will, definitely will. So that's, hey, but earnings is starting to slow down. We'll have a few big names here and there that'll pop up, and but other than that, there'll be no-name companies that you and I don't recognize a whole lot of.
And we're perfectly happy for a quiet week on at least one front, because the macro fund is probably going to drive us nuts all week long. Once again, the markets are closed today. No bond trading and no hardcore market trading on stocks. However, the European markets and the Asian markets are still working, and our futures markets have been open overnight as well. 45 minutes before no money gets thrown around, but as of the moment, do we have any indications as to what mood the future traders are in?
They're down just a slight tad bit. We've got the S&P 500 down a little over 1/10%. We got the the Dow 30 down right at the middle of between the 10th and the 20th percentile there, or 0.2 and point. Yeah. And then we've got the techs. They're basically flat right now. So on the other side, though, we've got silver up about 0.6%, trying to get back up to 22. And we've got gold up 0.25%. That's about $1,855 an ounce. And crude oil, I was looking at it last night, and it was down significantly, but it's bouncing back this morning, Dave, up 1.3%. Right now, it looks like $77.58 a barrel right now.
Yeah, that's kind of confusing. On Friday, we had a really big dip in the price of crude oil, and I really didn't understand why. I'm kind of back up to the neighborhood it was in for most of last week. Overseas markets, Asian Rim markets, for the most part, up at the close early this morning. It's a light day on Europe, only on the grounds that we are still the 500-pound gorilla on the block, and when we aren't doing anything, trading's light. They're generally drifting one side or the other of the zero mark. Pretty much a flat day so far in Europe, halfway through their day. This is one of those times where getting a plan can not only help you with your taxes this year, but help your future when retirement comes near. I know you can help with both. How do I find you?
Devin, give us a call at 382-0037 to schedule their core retirement design, where we'll help them design the retirement they always dreamed of. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here again tomorrow morning when the markets actually will be open again. Phillip, thank you. We'll see you then.
All right, man. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I want to thank you for joining us today. I hope you have a great day. Join us again tomorrow, same time, same place. Until then, have a great one. Bye now.